Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja, and with me is Shail Bhatnagar, our markets editor. Well, markets started the week on a muted note, but where are the markets headed going forward and what should be your strategy? We'll discuss this and much more. But first up, the top headlines for you. Indian stocks will resume their upward climb on Tuesday as overseas cues improve further and traders remain strong buyers in the cash segment. Government PSUs in the fertilizer sector are the newest kids on the block to join the party on the Lal Street. And HDFC Bank's market-beating second quarter earnings could spark a fresh rally in beaten-down Bank Nifty as traders look for strong cues to revive this underperforming index. HDFC Bank's second quarter net profit rose 6% on a YOY basis to 15,980 crore rupees. Net interest income was up 6.7% on a YOY basis at 27,385 odd crore rupees. Very good morning, Shail. It's a fresh Tuesday morning, and I hope it's going to be a terrific Tuesday for the markets. The market consolidated in a narrow range yesterday. Throughout the session, it was absolutely flat day when it comes to benchmark indices. However, broader markets they continue to outperform, and of course, certain sectors as well. 19,700 level that was also still intact. And now the trends in Gift Nifty indicate a flat to positive start for the markets. So where do you see Nifty and what should be the strategy? Shail, can you please unmute yourself? Okay, absolutely. So it was a flat day yesterday, as you can see on your screen, Nifty 50. That ended lower, 0.098% to 19,731. Now, the good news is that 19,700 is the level that is still intact on Nifty. And let's see how the action pans out going forward in today's trading session. And of course, Sensex, that ended on a flattish note as well. 66,166 is the level on Sensex. Now, 66,000 is still intact. And Nifty Bank, if we talk about, this index has been underperforming 44,225. That is the level on Nifty Bank. And let's see, HDFC Bank posted good set of numbers, better than expected earnings on HDFC Bank. But let's see, if this bank will be able to shine in today's trading session or not. And HDFC Bank, if you see, the net profit is up by 6% on a YOY basis to 15,980 odd crore rupees. And I think we have Shail with us now, and he will be able to tell us more about markets and more about the strategy as well. Shail, over to you.
Good morning, Tanya, and a very, very warm welcome to thousands of viewers who've joined us across the world. It's a fantastic Tuesday in Delhi. At least we've had a very nice rain overnight, and that's cleared up the entire sky. And I'm hoping that clarity as well as vision is available to a lot of traders and investors as far as the Lal Street is concerned. It's a fine morning on the Lal Street today. Likely we'll see an uptick happening fairly strongly. If you look at the Gift Nifty cues, as also cues coming in from Wall Street, as also from commodity space. It's a nice uptick that's most likely to see. The Nifty ended at 19,731. It was in a very, very narrow trading range yesterday of about 80 points, a low of 19,695 and a high of 19,775, 19,780. So it is this narrow trading range which is most likely to be taken out today, and the reason behind that could be the improvement in sentiment as far as HDFC Bank is concerned. Remember, if you see Nifty's daily chart, there is an excellent candle that has formed, which is that the close is equally between the high and the low at about 19,731, and it's a cluster of moving averages like 8, 20, 34, and to some extent even 50, which are pushing the index from below, which means they are acting as very, very strong support levels. So buy on dip anywhere towards 19,700, 19,650 will work out wonderfully. 19,700 yesterday has been held by the bulls, and that augurs well against the backdrop of very sound technical cues coming in from overseas markets, especially the Dow, as also a slight softening of crude oil prices that we've seen, Tanya. So a fairly strong improvement in sentiment as far as the Nifty is concerned coming in today. If you look at individual stocks, Tanya, and if you remember, we had discussed Hero Motors as the first stock yesterday. Once market opens, it was the top gainer as far as Nifty is concerned yesterday, and it's also one of the strongest stocks. So JSW Steel and Hero Motors are something that should be looked on the long side, as also HDFC Bank and ICICI Bank. There has been now an upward bias, at least on the technical charts, for these two stocks. Let's see whether it pans out or not, but these are going to be helpful not only for the Nifty but for the Bank Nifty as well. So these are the 3 or 4 stocks that look pretty good as far as the Nifty is concerned. And if you look at the options chain, which now shows that there is a very, very strong support for the Nifty around the 19,700, 19,800 range, and there is this cluster of moving averages which is helping the index on its journey up. 19,900 and 19,020 are seen as options resistances on the chain, and that's fairly visible as far as the index is concerned on the charts too. So I am presuming that the high that you saw on Thursday is most likely to be taken out. Let's see how the gift Nifty pans out, and any buy on dip towards 19,700, especially 19,650 should be purchased on the long side. That's how the Nifty looks, Tanya.
Okay, absolutely. So that was the strategy as far as Nifty is concerned. And what about Bank Nifty, Shell? Because markets were in a consolidation mode, but Bank Nifty, that was also in the same mode before ending the session, marginally lower by 62 points at 44,226 odd level. But as you rightly pointed out, HDFC Bank, that bank posted good set of numbers, better than expected. So do you think that this could actually spark a rally in Nifty Bank today?
Okay, Tanya, you've very rightly pointed out towards HDFC Bank, and now we'll see the daily chart of the Bank Nifty, a fairly similar position as far as the index is concerned. It closed exactly at the middle point of the high and low of yesterday. The fact remains that the 100 DMA and the other EMAs are actually acting as resistances for this up move. But given the earnings that we've seen in HDFC Bank and the fact that it's the highest weighted stock both in the Nifty and the Bank Nifty, especially the Bank Nifty, about 33-35% weightage of Bank Nifty comes from HDFC Bank, and the sharp underperformance that we've seen for this index as also HDFC Bank should hopefully now ease, and the Bank Nifty should also assume its upward journey. If you look at the options chain, 44,300 to 500 are offering very, very strong resistance to the up move, and 44,000 and 43,500 are very, very strong support areas for this particular index, and a buy on any further dips will help long only traders when it comes to Bank Nifty, Tanya.
Okay, absolutely. That was Bank Nifty for you. But as always, let's discuss the future and option space as well. Lots happening there as well. So, what are you looking at in the FNO space today?
So, Tanya, we had discussed the metal space yesterday, and it panned out beautifully as far as the government PSUs were concerned. NMDC, MOIL, MMTC were all companies that gave stellar returns on an intraday basis to our trader friends, as also to investors also. But today's action, if you see, is most likely to remain with fertilizer stocks, and I'll request the PCR to show the volume buzzers that we have pulled out as far as the index is concerned. And if you look at the first 5 or 6 stocks, they form a part of the fertilizer space. So GSFC is something that is looking really good. This is Gujarat State Fertilizer Corporation. So 2 or 3 things which are clicking in its favor is the fact that one, it's a government PSU. Two, it's in the fertilizer space, which across the board is showing very, very strong traction, both in terms of volume and price. Yesterday's volume on GSFC was somewhere like 6 crore shares, which is the highest at least in 2023, if not for a very, very long time, actually highest in the past 2-3 years. And this is accompanied by a very sharp breakout in price. So any dips if you see on GSFC, which is somewhere like 204, need to be added as far as technical charts are concerned. And a similar move is seen in Gujarat Narmada Fertilizer Corporation. Remember, this is at 670 yesterday, and yesterday's volume was somewhere like 73.4 lakh shares, which again is the highest since 26th of April 2023. So a 6-month high on volumes, a very strong price breakout. It's probably a 6-month high as well. And these are the 2 stocks that I'm looking at as far as trade is concerned. Tanya.
Okay, absolutely. That was the FNN space data for you. But, it's now time to welcome our market guest. And we have with us Dharmesh Kant today. He's the head of equity research at Chola Mandalam Securities. Very good morning, Mr. Kant, and always good to have you on our show. I want to begin by asking you, of course, about your outlook on the Indian markets. It's a flat market, but with a positive bias. So, how are you approaching markets at this point in time, and what should be the strategy?
Yeah, good morning, Tanya. Thanks for having me here. As far as markets are concerned, I think most of the geopolitical issues now looks to be settling down, and with U.S. President visit tomorrow to Israel, is like containment of the escalation which may happen. So this is a very good positive indicator, and I don't think the escalation will have a further greater repercussion or measures out there. So that side being settled, and it was only always a localized kind of activity. So, and our markets have corrected on backdrop of certain uncertainties relating to the global markets, be it US Fed policy meet or the geopolitical issue which has happened. So a good time to buy. We have seen the start of the earnings season. In the last interaction, I have pointed out that IT would be a dampener or no fireworks expected out there. Same was the case. In fact, it was not a good set of numbers. But barring IT, the other numbers which are coming out are very good. And I mean, banking and financials are just rocking the show and the type of earnings growth they have been projecting, and that too in Q2. So going forward, when you move into Q3, which is a festive season and a much better quarter for BFSI space, the things are likely to pick up more out there. So I think it's time to start buying in a staggered approach, but aggressively. So earlier it was more of a wait and watch kind of a dip kind of a buying, but now the strategy has shifted to more of an aggressive buying space, and the sectors which are recommended for buying are the same. There's no change in stance out there. I mean, infra, railway, power sector, defense. Now, specialty chemical is finding some traction post the Chinese stimulus out there. And the good part about China is once they start rolling out stimulus, there's a continuity of rollout which happens out there. It's not just one-time announcement and then they will wait and see. They just pump up the economy. So there the traction started building up out there. Some traction in metals segment as well we have seen, but that's a cyclical trading play. Apart from that, overall auto sector also looks very, sweetly poised. The last month's number which we have seen, be it two-wheelers, four-wheelers, and commercial vehicles have been doing well. So broadly, it's a sweet spot to be in. As a built up to the Diwali, we are likely to see a new high by the time we reach Diwali on the markets.
Dharmesh, welcome to Business Today Television. It's such a pleasure to host you. Let's talk about individual stocks, and we are very grateful when you say that you see a record high somewhere like Diwali that will not only bring festive cheer to households but also to bank accounts as well as demat accounts. Welcome once again. Let's talk about individual stocks. What looks good to you, which can be added piecemeal in the form of an SIP, and which will adorn the portfolio, say, for 2-3 years?
Yeah, good morning, Shail. Thank you so much. Indians' household per capita income is already on the rise, and which we have seen in the kind of taxes which are being paid, or be it direct tax, indirect tax, and other activities which is happening. So bank balance is swelling, and so is the case with the equity market. So year till date, we are up around 8.5% or 9% on a Nifty level, but mid and small cap have done far better. So already profits are sitting out there, and I think the traction is likely to build up just as an aggressive buy, or to play this out of the positive scenario which is likely to be rolled out in next couple of weeks. I think fertilizer space you just talked about, that is looking absolutely fine. GSFC and GNFC is definitely at trading momentum buy out there, and a lot of valuation comfort out there. They are trading at half the ROE multiples which they have. So there's a traction out there. But I think UPL that has corrected quite a bit and has done nothing for the last 6-7 months, and it's been trading around. It looks to be a very attractive buy at current levels, around 13-14% kind of an ROE it is having. And if you look at historical weight of evidence, 15-17% kind of a PAT growth they have done. Going forward, as specialty chemical prices get stabilized in the China and European regions, and there's a pickup out there. So it's a bottoming out is already in place. And if China stimulus comes through and there's some help from the European market, then this is a very good diversified play on agrochemicals, specialty chemical, industrial chemical, chemical intermediaries, along with seeds for the agriculture space. So I think 720, 730 with say 2 months kind of a time horizon, because this is a delta mover, it moves very fast. Similarly, it corrects also very fast. So a good aggressive buy can be initiated. Just to play it a bit safe, I would love to give a technical levels as well. So 590 can be the stop loss for this trade with an upside target of 720 or 730 by the time of Diwali, or 5-10 days plus minus.
Wonderful. Some of these stocks Tanya and I have discussed beforehand as well. Dharmesh, I'm sure you've dug very deep into the HDFC Bank's quarterly earnings. Although some of the numbers, especially the net NPA, seem to have risen marginally. But what do you make out of the second quarter performance for this particular bank, which has been a sheer underperformer when it comes to both Nifty and the Bank Nifty? What looks good to you? What looks bad?
Yeah, definitely, Shail. As far as bad is concerned, there wasn't any to our supplies, and we all were expecting that some asset quality deterioration could be far, worse, but that did not happen. And I would like to give a benefit of doubt to HDFC Bank for next 2 quarters, because the point was the aggression which was missing from the top management is likely to come back after the top management rejig which they have done in the last fortnight. At the same time, the three highlight point of the number was, one was the loan growth. Sequentially, it went up by 5%, which is almost best in the industry. Last quarter, it has reported a advances growth of only 1%. So 5% is a great number to look at, considering the size of this conglomerate which is there. Secondly, ROA guidance, the management guidance sounded very confident of 1.9 to 2% was remarkable. We have to see whether this guidance is stickier in nature and actually the result into the ROA of 1.9 to 2%. And then the asset quality slippage was far less than what was being expected. So these were the three key highlights. Balance, I mean, the historical weight of evidence is great for HDFC Bank. It has been a compounder both on the revenue part as well as in the stock price front. But today morning we'll do have a good opening and we will see some buying traction coming back because a lot of selling activity and profit taking has already happened. And last 2 years, HDFC Bank has done nothing compared to its counterparts in the BFS space. So some traction will happen, but I think after that, I mean today's trading and maybe tomorrow, it will be in a consolidation phase for some more time. But I mean, on the nutshell, it's a good set of numbers and a positive set of numbers. So no negative. Now selling will stop. People who are holding will continue to hold. But and some people will definitely initiate new buying. A lot of inquiries have come to us. But as a house, we have taken a view. They would like to see one more quarter of earnings before fundamentally we can, re-rate it as a multi-bagger for next 3 4 years. So I would like to give it a pass this time around.
Okay, absolutely. So that's the verdict on HDFC Bank. But let's discuss some of the auto names as well, Mr. Khan, because we were discussing Hero MotoCorp and Tata Motors yesterday, and they were among the top gainers in yesterday's trading session. What are your thoughts? I mean, ahead of festive season, where are these auto names headed?
Yeah, I mean, this time the festive season was pushed 20 days forward, and because of that, we did not see September numbers coming to that extent. So it was a muted kind of a growth. But the good part is all segments barring the tractor showed some traction in the numbers. I mean, two-wheelers was up around 2 or 3% on a sequential basis as far as the dispatches are concerned. Four-wheelers did very well, passenger vehicles, and the commercial vehicles was a pleasant surprise for the entire market. So, having regard to the festive season, which is now next 2 months is about that, I think all these companies are likely to do well. And the best part is the tailwind of lower input prices or benign commodity prices is still there. That has not gone away. So the operating margins will keep on improving. One, because of the lower input costs. Secondly, because of the operating leverage kicking in, because more capacity utilization will happen as they produce more vehicles. Price hikes they have taken already. This time around they have not done. But the good part is if you do the dealer checks, the discounts are not that great, which it used to be, last season. So discount is there definitely, but it's not, the extent is lesser. So that will add to the profitability. In the entire space, domestic centric focus, if you look at it, I think Hero MotoCorp, TVS Motors, and Eicher in the two-wheeler space looks very interesting and attractive. Easily 10-15% kind of an upside based on the back of as the numbers still down and dealer checks roll out, it's likely to be there on the cards. Four-wheeler space, Maruti has done phenomenal. It's already up at around 10,700 kind of levels. So if you look at the valuation, it was always expensive. It will remain expensive. But again, the aggression by the management of doubling their capacity and the type of launches they have done. And the best part is the new launches like Grand Vitara and Victo has been doing phenomenally well on the street. So the numbers are rising out there on the SUV segment. And Maruti is now slowly entering and getting entrenched into that space as well. So that augurs well. I think the momentum is likely to continue for Maruti. However, on the valuation side, I think based on FY25 numbers, 11,500 should be the upper band of the valuation multiple for Maruti. So not much scope out there on the price point of view, so stock price point of view, not much profit can be made out there. Risk reward ratio is not very conducive. And then I think best in the pack is M&M. So you have all the plays, culminating into an M&M, and its valuation wise is the cheapest among the entire automobile space. If you club two-wheeler, four-wheeler, tractors, and everything into commercial vehicles into place. So M&M should be a portfolio buy for next 1 year, and I think it's again a 20% kind of a growth if you are holding it for 1 year time frame. So just to sum it up, as far as automobile basket buy is concerned from the direct OEM manufacturers, it is Hero MotoCorp, TVS, Eicher Motors. So Maruti you should have in your portfolio, followed by M&M. In the auto ancillary space, there are many players, but I think Apollo Tyres looks very attractive at current valuation multiple. If you look at tire prices internationally, it has not gone up. It's around 12% year to date kind of attraction is there. But the type of OEM and replacement demand is coming back into the tire segment. So Apollo Tyres can also be added to one's portfolio. And again, here the margin of safety is high. The stock prices corrected 15-20% from the peak levels. And I think the retracement back to the peak levels is very much on the cards for Apollo Tyres.
One of the strongest commentaries that I've heard on the auto space in recent memory, and Dharmesh, what a view it is when it comes to individual stocks, their strengths as well as their abilities to navigate the future that we are in. The other thing that I wanted to point out as far as the monthly performance of F&O auto stocks is concerned is the very sharp uptick in Bosch Limited. I know it's a very low low beta but very high ticket sized kind of a stock. But would you comment on Bosch's moves forward? 20,643 up 8% in this month of October, and the top gainer in the auto F&O.
Yeah, Shail, so this is liquidity is low, and since it's a very high ticket price, stock price is there per share. Normally, small buying leads to a high traction in the stock prices. But again, the theme of auto ancillary is back, and people are getting back into this segment, and this looks pretty attractive for at least for if you have a horizon of 2 quarters, because Q3 and Q4 usually one of the best quarters for auto industry, and we are heading to that. My only concern about Bosch Limited is its valuation context. So valuation-wise, it looks far expensive compared to the counterparts. So that is where the pick and choose policy is there. So we have not recommended it for a buying traction to our clients. One is, as you rightly pointed out, because of the higher per share price. Secondly, is the valuation concern out there. Nothing wrong with the business. The business will continue as usual, and the company is doing fairly well.
Fair point. Bosch, for old timers, is Myco, and they control the spark plug market in India. The stock is trading at its highest since 2018. Let's look at pre-open trades. A very nice shade of green, 242 points higher at 19,973. So it seems that our lucky mascot is Mr. Dharmesh Kant. And let's see how this pans out. It's a 1% uptick. I'm sure this will settle down sensibly towards a 50-60 point rise, but a rise nevertheless. And this is a very, very welcome change since the downtick that we saw on Friday and Monday. Let's immediately shift focus to what the index heavyweights are doing. And the first port of call will be HDFC Bank. 4% higher, 1590. Remember, this is the highest weighted stock both in the Nifty and the Bank Nifty, so it's going to bring good cheer to the market. Let's see the second highest weight, Reliance Industries. The stock at the moment is up 0.3%, 2350. Infosys 1454, up 1.4%. These are the three heaviest weighted stocks on the index. Now let's look at the second rung, which is ICICI Bank and Axis Bank, both mildly in the green. ICICI Bank 0.6% higher, 957, as also Axis Bank 1006. So it's a sea of green as far as the index heavyweights are concerned. All 10 of them now ticking merrily away in a nice shade of green. The Nifty is still up 155 points. It's adjusting slowly. Let's look immediately to the F&O space minus the index heavyweights and focus on the gainer side. Let's look at very high beta, low ticket size. Fresh record high on Federal Bank, 152.40, 2.5% higher. Power Finance Corporation, 255.90, 1.6% higher. RECL, 1% higher, 297. A nice green tick on Apollo Tyres. Remember, this is something which Dharmesh just spoke about 389, 2.2% higher. Fairly strong ticks coming in. Let's look at some losers on FNO. It's Birla Soft down 1% at 538, but I won't be worried. It's seen a phenomenal rally. Let's look at what the auto space is doing. The top gainer is TVS Motors, 0.3% higher, 1607. Remember, this is a fresh record high for the auto space as far as two-wheelers are concerned. Tata Motors, 0.5% higher. This needs to be grabbed, 669. As also Motherson Sumi, 1% higher, 9804. We'll shift focus immediately to NSE 500. The Nifty meanwhile continues to show its strength, 19855, still up 121, but slowly readjusting to realities. Okay, it's the auto space. SEAT, 14% higher, 2400. MMTC is a stock that we've been watching fairly carefully, 8735, up 5%. Remember, the circuit filter has now been adjusted lower. Okay, what about other points as far as the sectors concerned? Okay, Gujarat Alkalis is up 1.4%, 790. Remember, these are all high beta stocks. Let's look at KEC International, 5% higher, 685. The Nifty firmly above the 100-point mark, 19842. It's a wonderful opening today for Tanya. And let's continue the conversation with Dharmesh. Tanya, I believe you have a question.
Yes, but I think Sudeep Shah, our market guest, is also with us. He is the Deputy VP of and Head of Technical and Derivatives Research at SBI Securities. Sudeep, very good morning. Always good to have you on our show. And let's first take your quick technical check on markets.
Good morning, Shailji, and good morning, Tanya. Markets, if we just see what is happening is that last few days, indices have been in a range between 19,600 and 19,850 on the upside. And for me, this is a win-win situation because if you see the dollar index, which has moved up to 106 and to the Brent crude prices, which are now sustaining above $90 a barrel. So despite that, these factors, if the markets are able to sustain closer to, say, only 2.5% of their all-time highs, that is a fantastic kind of an achievement. And in the last few days, indices were range-bound because HDFC Bank numbers were going to be announced, and that is why we were seeing some kind of a pressure on Bank Nifty from higher levels. But now, since the numbers are out of the way, whatever may be the initial reaction in the first 10-15 minutes, but overall, I feel 44,000 on Bank Nifty will act as a strong support. And crossing 44,530, where the 20-day exponential moving average is placed, I feel Bank Nifty is poised for a short covering move up to 44,750, 44,800 on the upside. Coming to Nifty, 19,675, 19,700 zone, where the 20-day exponential moving average is placed. We feel now going forward for the next few sessions, these levels are the most important. Is the most important support zone, and on the upside 19,900 will now act as a resistance because there was a pending gap on the way down when the market sold off in a couple of weeks back. So now that gap zone needs to be filled, and I feel that is the most crucial number that we should be eyeing for in the next few sessions. So above 19,900 indices are poised for a fresh all-time high, a breakout above that zone. So for me, 19,900 zone will be the most crucial number that I would be watching out for.
Okay, absolutely, Sudeep. And what about your top technical bets?
My first stock for the day is L&T Finance. Now, in the last few sessions, we have seen L&T Finance consolidating between 130 and 134 levels. Overall, the stock is in an uptrend since March. From the lows of 85, the stock has witnessed a high of somewhere closer to 140 in July. And since then, the stock is in a range between 125 and 135, 140 on the upside. But in the last few days, we are seeing some bit of action. Open interest built up on the long side, as well as at the money put writing is also visible. So what we feel is from the current levels, L&T Finance can be bought with 132 stop loss and 145 target on the upside. And one more interesting point about L&T Finance is that last few days it was in ban and it has just come out of the ban yesterday. So I feel that the stock could have a positive impact going in today's session. The second stock is from the cash segment. Now, this stock named Five Star Business Finance. Now, this is a lending company which focuses on SME lending and small micro lending. So here the chart setup is very strong. Uh, if you see the positional charts post the IPO, the stock has moved from 520 to 850, 860. Post that, it has corrected. Profit booking was witnessed, but once again, the zone of 100-day exponential moving average, which is closer to around 740, 735 zone, has acted as a strong support, and we are seeing a good price action move here. So I feel going forward in the next few sessions, with a stop loss of 730, the stock can head higher up to 800, 820 on the upside.
Okay, absolutely. So these are the two stocks. Keep an eye on that. And Mr. Kant, coming to you now, Geo Financial Services. This stock will be in focus today. So basically, the company posted good set of numbers for the September quarter. The profit is up almost 100% to 668 crore rupees from 332 odd crore rupees in June quarter. And the revenue is also up by almost 47% on a sequential basis. So, what are your thoughts on Geo Financial Services and what should be the strategy?
Yeah, Tanya, optically the number do look very good and great, aggressive, but there's a dividend element out there. If you look on a pro forma basis, if you strip the dividend out there, then these numbers won't hold good. Then it's a muted kind of a performance from the Geo Financial Services. See, the point here is most of the activities are yet to be rolled out under this umbrella. Like insurance broking and then mutual fund kind of a services, and that is where the real juice is from. It's more of a payment services kind of an activity through which they have been earning their profitability as of now. So, our technology platform in the NBFC space is what they have been advocating, and a lot of tie-up with multiple banks are happening on place. So, it's a futuristic kind of a scenario. So, as of now, you can just, I mean, if you are holding it, continue to hold it. But I think refresh buying should be, avoided as of now. Let's see 1 or 2 quarters more before, getting aggressively into this stock. Just one more point, if I may
Tanya,
add.
we've had a blowout. Basic.
Yeah. So, Shail, what I was trying to say is,
yes,
lot of
you wanted to
competition.
add something, Dharmesh.
Yeah. So a lot of competition is already there in this fintech space, and that's the reason why some time should be given before a portfolio buy for 2 or 3 years should be there, done in the Geo Financial Services. Thanks, Shail.
Right. So, Tanya, we have a blowout on the Nifty. It's now settled 111 points higher at 19,843, and I am of the firm belief that we should get Mr. Dharmesh Kant more on the show. He's our good luck mascot. The Nifty has taken out the pivot, the first resistance and the second resistance as well. So 19,843, a huge gap up of about 110 points. Mostly we have seen these gap ups, if they are able to sustain, which is fine, then the Nifty moves in a sideways consolidative pattern, or you see selling. Since you are the best technical guy on the screen at the moment, what would your strategy be on the Nifty?
Firstly, let us just see where the opening is. So if the opening is closer to 19,840, 19,850 zone, we are exactly opening in the firstly, we are opening above last few days swing highs, which is on 11th and 12th of October. So that is important and that is positive. Secondly, indices needs to sustain about 19,890, 19,900, where there was a gap which I was just mentioning few minutes back, which was created on 21st September gap down. So that zone now 19,900 positionally will be the most important level to cross from the next few days perspective. But for the day, if someone is a day trader, someone wants to pick up positions on dips, one should wait for a dip closer to 19,800 19,815, 19,820, a 20-25 point dip during the first half an hour, because generally these gap ups in the first 15-20 minutes would give you an opportunity. There would be a dip, but you need to take that dip around 19,810, 19,820, and then ride the rally on the upside, because post the opening I strongly believe that 19,800 call writers would run for their money, and we would see some aggressive put writing in 19,800 strike price also. So that in the first 20-30 minutes or 40 minutes we might see a range bound trading between, say, closer to 19,820 and 19,855, 19,860. There could be a dip, but that dip should be utilized to buy, and we could see a rally in the second half going forward.
Fair point. So there is no reason for any of the traders to open up their swords and start buying the index beyond 19,840 or beyond 19,800. This is really overheated. The first up move is over as far as the gap up is concerned, and now we'll wait for the dip, as so rightly Sudeep suggests. Now let's look at the winners for today as far as the index heavyweights are concerned. Earnings boy HDFC Bank, top gainer 1.7% higher, 1555. Remember, this is one of those underperformers which now seems to be flexing its muscles. Let's move to NSE 500, and the top gainer is an auto stock, SEAT, 2320, up 10%. We've seen MMTC 4.8% higher, 8720. This is way overheated. Let's look at the PSU basket immediately, and let's look at winners here. Maharashtra Bank, very strong earnings that came in, 2.2% higher, 4850. Central and Union Bank up about 1%. UCO and IOB up about 0.8%. Very strong traction coming in the Nifty PSU banking basket. Apart from that, you have MSTC, which was moving towards a record high yesterday, 511, 1.4% higher. You've seen REITs up 1% at 507, and you've seen a very strong traction coming into Shipping Corporation of India, 2% higher, 160. ITDC 2.5% higher, 481. Let's look at the high beta space. Datamatics 2% higher, 605. Lemon Tree 1% higher, 123. Okay, ladies and gentlemen, we have the first uptick as far as prices are concerned. The Nifty at 19,837, up 105 points. It's a triple century on the Bank Nifty, 44,525. Let's look at HDFC Bank. What's it doing? It's open right where it shut shop in pre-open, 26 points higher at about 1550. Okay, what is Infosys doing? Infosys is 0.5% higher, 1442, and Reliance is trading 2352, up 0.3%. It's a very strong opening. The gap is now getting filled. R2 has been taken out. So let's see how the Nifty fills this gap. Bajaj Finance will be in focus today. Remember, it's the weekly expiry of the Fin Nifty, 0.7% higher, 88,901. The Nifty is still 88 points higher as far as prices are concerned. We'll shift focus to F&O stocks. Bajaj Finserv, days high 1654. 0.7% higher. It's also at its highest level as far as markets are concerned. It's a banking day. Axis Bank, Bank of Baroda at day's high, 207, up 0.6% on Bank of Baroda. Axis Bank 1012, 0.7% higher. SBI has joined the party, 0.7% higher, 579. ITC is supporting the Nifty, 450, and it's up fairly strongly. SEAT is up 7%. Its second quarter performance, in which you saw a 1.7x% increase in net profit. What else is ticking really well? Let's look at the PSU basket. Let's not discuss MMTC. It's super hot, still up 6.7% at 8850. You have Kudremukh Oil, 8% higher, 428. Maharashtra Bank is in focus, 2.7% higher, 4880. And you see very strong traction coming in the stocks like ITC, MSTC, as also NMDC. Let's shift focus to high beta. You have a strong move coming in HCC, 1.5% higher, 2905. Canfin Homes in the green, 1.3% higher. Lemon Tree ticking away at 123.7, 1.35% higher. Fairly strong opening. The Nifty now up 86 points at 19,809. We'll discuss L&T Finance Holdings. Remember, this is a top call given by Sudeep. Now 2.85% higher, 138.75. What would you do, Sudeep?
I feel the stock has given a fresh breakout here, so I would like to trail my positions. And now 134, 135 will become an important support until the time the stock holds this L&T Finance holds 134, 135. Then the stock could head up to 143, 145 levels in the next few days. So I feel it would be much better if we hold on to our winners in such markets which are range bound and do give us lesser opportunities, and a clean run on the upside is visible here in terms of L&T Finance.
Okay, 19,815 on the index as far as the Nifty is concerned. Your very quick view on Bank Nifty, Sudeep. Should you be doing anything?
Shelji, Bank Nifty right now, it's trading at its most crucial level because the 44, 520, 44, 540 zone is that zone of 20-day exponential moving average. We've just crossed that, but I feel it's important that Bank Nifty sustains above this level for half an hour. And then I would be very confident and I could say that now it is headed higher up to 44,800. Overall setup is positive, but early morning these gap ups generally tend to sell off 50 100 points, 150 points, and then second half we see a good reversal. So it's I feel it's important that we should not jump the guns here, wait for some kind of a proper setup to be visible and then go long from here.
Okay, absolutely. And shifting our focus back to HDFC Bank, Sudeep, what would be your advice? What are the levels to watch out for now after the results, after the stellar quarter two results, I would say?
See, for HDFC Bank, today's high of 1555, 1560 zone now will be the most crucial number. See, there are two things here because yesterday, while EOD and today morning, I was seeing the derivatives data of HDFC Bank. The call option side, 1540 and 1550 strike prices are holding the highest amount of open interest. So that zone and it is equal. Now, these both strike prices hold the open interest that both these strike prices are holding, that is more than at least 3x of all the at the money put option strike prices. So that is why I feel 1555, 1560 zone will be the most crucial resistance. If HDFC Bank manages to take out 1555, 1560 levels on the upside, that would force all the call writers to cover their positions, and then we could see a big move up to 1600 levels on the upside. So for me, 1555, 1560, which is today's high zone, would be the most crucial number to watch out for in case we have to expect any short covering move on the upside. Else, this gap, which has the gap up opening of today, the gap could fill and we could retest 1530 on the downside in the first half.
Let's focus on Bank of Maharashtra. I'll rustle up the numbers that the bank has posted, but a very quick view from Sudeep. At the moment, it's the top gainer in the PSU banking sector, up at 49,150. Very strong volumes, 3% higher. Would you have a view, Sudeep, on Bank of Maharashtra, 4930?
Absolutely, Shailji. If we see the stock now, the stock from the lows of June from 27 rupees almost have doubled up now. It's around 50, 50, 49, 49.20 levels. The overall trend is strong. Even the shortest moving average of 20-day exponential moving 20-day EMA has not even been breached once post July. So for me, now the trailing stop loss could be around 46 rupees where the 20-day exponential moving average is placed. And till the time the stock holds this level, we could still aim for an upside up to 53, 54 levels in the next few sessions to come.
Okay. a wonderful move coming in there, and it's a rally across the board, Tanya. Let's look at the advanced decline ratio, and then we'll get Dharmesh ji into the conversation. He's been our lucky mascot for today. PSU Banking Index 1% higher. All 12 of them are in the green. 5136 in front of you as far as the bank is concerned. Advanced decline ratio is one of the strongest that I have seen. 1584 green and just 271 in the red. Just look at the advanced decline ratio of NSE 500. 426 stocks out of 500 are in the green. So this makes it an advanced decline ratio of somewhere like 9:1. Very, very strong moves coming across the board. The Nifty is still holding on to its gains, 82 higher at 19,812, but the action is in Bank Nifty, 277 points higher, 44,500 is what I see. Let's look at stocks that are hitting fresh highs, and that is where Sudeep's genius will come into play. Okay, we have an all-time high in FACT, which is a fertilizer stock. ITI, which we shouldn't be discussing, 7% higher, 312. Kalyan Jewelers, 288.45, 1.6% higher. Polycab as well as Century Textile. So this is how the broader markets are shaping up. Fairly strong momentum in the super high beta counters like Suzlon, like HCC, like Lemon Tree, like Bombay Stock Exchange, Canara Bank. These are the stocks that decide on which side the sentiment will be on a particular day, and that's how it is sticking fairly sharply. I would be not doing my duty correctly unless I take a view on Bajaj Finance on Tuesday. To you, Sudeep, very strong traction coming in as far as Bajaj Finance is concerned.
Sudeep, can you please unmute yourself?
Yeah, so sorry. Yeah. See, if we see Bajaj Finance, the charts are well placed. In the last few months, we have seen a fantastic rally on the upside. Even the shortest moving average, that is the 20-day exponential moving average, has not been even breached once post 30th of August, once the stock moved above 7,200 on the upside. Looking at the derivative data also, if we see the option writing data, strong put writing is visible at 8,000 strike prices and 8,100 strike prices. Even today, we are seeing some additions. So I feel a strong base is being formed around this zone of 8,000, 8,050 on the downside. Until the time the stock holds this level, I feel on the upside, 8,300, 8,350 levels could be witnessed.
What about you, Mr. Khan? What would be your thoughts on Bajaj Finance ahead of its numbers today?
I think it's already moved up quite a bit, and the rally has been phenomenal since the last 2 quarters in Bajaj Finance. Same has been the case with the numbers. They've been reporting excellent set of numbers, and in a environment where monsoons was slightly weak and things like that, still AUM growth of 23% is phenomenal. Let's look at the numbers in detail, but I'm very sure the numbers should again surprise the street on all the accounts. And the asset quality is the place where one should be looking into. So any containment of further asset quality, I mean, the deterioration part is there, and you say if an improvement is there on the back of growing AUM, I think the stock will again go in for re-rating. It's very expensive. I mean, it's the most expensive NBFC right now. But this momentum is likely to continue, and the only thing I would be looking forward to is the asset quality. And if there is an improvement out there, then this momentum can take it to even 9,000 kind of a levels, the way things are shaping up. Because, see, my own take is Q2, the earnings on Y-on-Y basis would be around 30% kind of a growth for Nifty 50 companies. Q3 would be better than Q2. So we would be heading into a quarter where on the backdrop of better Q2 and much better Q3. So there, this drift in the upside momentum is likely to continue out there for all the quality stocks.
Okay, absolutely. And Mr. Kant, what about L&T Finance? Because it's the top gainer from the mid-cap space today. 139 is the level where we are at, 3.5% uptick there. What are your thoughts?
It's again a very good company and the traction has been very strong. So all in the, I mean, BFSI space or the financial services space, all the companies which have been doing well are a buy. Right now, if you are looking at just valuation multiple, I don't think it's the right time to look at just historical price to book and the other matrices of valuation, because the growth which is coming on the advances side on the is phenomenal. So that is where the real traction is. 33%, 34% kind of a growth, and on a Q on Q basis, 4-5% has been the average growth across the board. And this is, I mean, last 10 years it has never been like this. So I think the stock traction is there. You have to pick and choose your cherries out there after due diligence and all. So as a basket, the entire sector is buzzing, be it private sector banks, public sector banks, and BFCs, even Poonawalla FinCorp, all these companies are doing exceptionally good business. So appetite for further finance and economic activity growth, both on the personal as well as on the corporate side, is rising faster than what was being expected.
Okay, absolutely. And I think we should also discuss Deepak Nitrite. That is back in action actually. And it is also already a multi-bagger stock if you see more than 10,000% return in the last 10 years. So Deep, what would be your thoughts on Deepak Nitrite? What are the levels one should watch out for?
Tanya, if we see Deepak Nitrate, the stock was in a downtrending channel in the last, say, 15 odd days, right from 25th of September till date. But today the stock has broken out of that consolidation range. The stock has even managed to cross above the 20-day exponential moving average on the upside now. So for me, this is kind of a reversal pattern. And the stock has been quite chaotic, if we say, because in the last 6-7 months, a lot of swings have been there, 2200 to 1950, again then till 2350, back to 2100. So but despite all these swings, if we just look at the larger pictures, the bottoms are rising. We are seeing higher bottoms in place in the last 6-7 months positionally, so that is a positive. So the last swing bottom at 2050 will now be an important pivot point for me. Until this zone holds, I feel this up move can accelerate all the way up to 2280, 2350 on the upside.
Okay, and what about you, Mr. Khan?
So on Deepak Nitrite,
Yes.
yeah, again, I mean, as I said, specialty chemical and the entire chemical space is seeing a traction back into the market. So phenol side of the business has picked up for this, and the base price, the input prices have cooled off and stabilized. The traction has much to do with the European counterparts. So if they are able, if the pickup in activity is there, then definitely, I mean, 10% kind of an up move can be expected out there. But off late, the last 1 year has been quite, topsy-turvy for this company because of multiple reason in the roller coaster ride it has seen because of that. But as of now, it does look like an attractive buy, as is the case with the entire, chemical and specialty chemical space.
Let's broaden our horizons and let's try and pick stocks which are doing phenomenally well beyond the Nifty, which in fact is holding on to its gains 90 points higher at 19,820. Remember, we've already seen the first 15 minutes of trade, and the low is 19,810, the high being 19,850, and the high of 19,850 is basically the previous high for the month of October, which we saw on both 11th and 12th of the trade. So let's see if this breaks out happens, but a lot of action happening on stocks like Tata Consumer. Let's get Sudeep into the conversation. A fresh record high here on Tata Consumer, 922.90. Sudeep, what are the medium to long term charts of this particular stock telling you? Fairly strong traction coming in the FMCG space as far as Tata Consumer is concerned.
Shelly, Tata Consumer, then Nestle, Colpal, all these stocks have given a good breakout on the upside. And I feel Tata Consumer, per se, the chart right now has made some kind of a rounding bottom pattern in the last 4 or 5 months, right from 850 to right now at this current price. The overall, the setup prior to that also was very strong. It was in an uptrend, followed by a consolidation, and now we are seeing a fresh breakout here. So these kind of patterns are uh, very positive in terms of positional perspective. And in the next few weeks, I feel Tata Consumer is headed up to 960, 970 levels on the upside. The overall stop loss now for this positioning could be around 890 on the downside.
Fair point. This is one of those record highs that are coming in from the Tata stable and therefore need to be checked fairly closely. What else is ticking in the green? In terms of old favorites, let's again visit Bank of Baroda and Canara Bank. Remember, these were the first two stocks that sparked a lot of interest as well as an uptick in the entire PSU banking sector. A swing trade in the making on Bank of Baroda, 206.90. What are the charts telling you, Sudeep, on BOB?
Shanti, if we see Bank of Baroda, firstly the stock was hit by some bad news in the in the last week, and then we saw a consolidation breakdown below 210. So for me now, 209.10 zone would be the most crucial number where the 20-day exponential moving average is placed. So above that, if the stock moves, then I feel once again the stock will manage to create this bottoming process around 200, 202. But I feel 210 level needs to cross and sustain on the upside for any further up move. That would be the most crucial resistance that I would be watching out for, and I would not be too aggressive into this stock going in the next couple of days till this zone of 210 is not taken out.
Okay, absolutely. And there's one thing that is very interesting, Sudeep and Shell. We have this Avengers of FMCG that are gonna post their numbers on 19th of October. And we have Nestle in the morning, HUL in the afternoon, and then we have ITC. So Sudeep, I want to know it from you that what should be the strategy, for all these FMCG majors ahead of their numbers?
Tanya, starting with ITC now, see if you see ITC in the last 1 year, the stock had a stupendous run from 330 to almost till 490, 498 on the upside. But since then, since 21st of July, we have seen the stock initially witnessing profit booking, then consolidating, and now last couple of months we are seeing the stock between 435 and 445, 455 range. So I feel a range breakout is around the corner post this consolidation. And now maybe the stock is just waiting for the result numbers to get announced. So for me, ITC is building up a good base around 435, 445 zone. It's not a day trading stock, but from a positional setup, this setup looks good from a bottoming out perspective. The second stock would be HUL. Now, HUL, if you see, HUL in the last several sessions has created some kind of a bottom around this 2450 mark, 2460 mark, and every time it has approached this 2450-60 mark in the last 12 to 14 months, we have seen a good buying which has emerged from those zones. So from the current levels, I feel the stock is looking good, headed up to 2630, 2650 on the upside. So that chart also looks positive. So for me, the FMCG space could act as a savior for the next few sessions, and that could be very important to take out the 20,000 level on the upside.
Okay, let's pay attention to the components of Bank Nifty. We've already discussed HDFC Bank and Bank of Baroda. A fairly strong tick is coming on City Union Bank. Sudeep. It's the top gainer within the Bank Nifty space in the October FNO expiry, up about 11%. How do you see this stock? This is not something that we discuss in great detail, but at 140 and on a relative basis, this one looks a steal.
Shailji, if we see City Union Bank, the stock in the last few sessions has managed to sustain above 134, 135 levels, where the 200 DMA is placed, and the stock was sustaining below this 200 DMA since January 2023. So this was the first attempt on 11th of October when the stock broke out up to 141 levels, where it crossed its 200 DMA. And since last 4 5 days, there was some profit booking from higher levels, but that also the profit booking ended at 135, 136 levels, and it retested the 200 DMA once again, and now we are firmly moving up. So I feel overall the setup is strong. It might take a few days. We might see some consolidation going ahead also in this stock, but steadily a bottom is being formed. And if we see last 4 5 months, a decent bottom is being formed around 120, 125 levels on the downside. Every time the stock approaches this 120, 125 levels, we are seeing strong buying emerging at lower levels. So overall, a bottom is being formed. It's just a matter of time when this zone of 140 to 143 will be taken out, and the stock would head up to 158 to 165 on the upside.
Okay, that's the view that is coming on City Union Bank. Interesting moves ahead as far as HDFC Life is concerned. A fresh day's high at 636. I am seeing a lot of traction in IDFC 126.90, and of course the entire PSU space is abuzz with gains. ITDC at 511.60. You've seen Power Grid at 205.85. Coal India ticking merrily away in the green, 313.85. Very, very strong moves coming in. IOC 91.35, and the Nifty still holding strength, 86 points higher, 19,820. The gap up is fairly strong. Remember, the first 15 minutes have passed, and we have a very strong green candle which has sustained not only the gap up but is now fighting a very strong battle at R2, which is the second resistance at 19,820, 19,824. These are the stocks which are helping the index on its way up. I'll tell you the point contribution when it comes to individual stocks. We have HDFC Bank contributing about 25 points to Nifty's current rally. Let's look at the other stocks. Infosys is contributing 7 points. ICICI Bank is contributing 6 points. Reliance is contributing 5.5 points, and that's how it is. In fact, okay, I'll tell you a surprising statistics. I think the entire 50 shares in Nifty are in the green. No, not entire 50. About 4 or 5 are in the red, which are minor ones, Divi's Lab, L&T, UPL, ONGC, and even the losses are fairly insignificant. Let's shift focus to NSE 500 and look at the top gaining list. Okay, it's ITI, best left not discussed. A very strong rally coming into tire stocks. We started with CEAT, which hit 7% higher, 22.49. Very strong earnings coming in from CEAT, and this is also a record high. Second quarter consolidated net profit rose to 208 crores versus 7.8 crores earlier. So there's a very strong spark. And the two top gainers in the auto space within the FNO basket are Apollo Tyres up 3% and MRF up 3.4%. As also in the cash segment, JK Tyres, fresh record high clicking in here, 336, with a very strong breakout on volumes. Sudeep, coming to you, what would be your favorite stock in the tire space? All four of them, the ones that I have discussed, have run away very smartly.
My favorite stock in the tire space, there are a couple of them now. First one is JK Tire. JK Tire has run up very smartly now. And why JK Tires? Because in the last 6 months, when a lot of tire companies were under pressure, say Apollo Tire or even Seat, this was one stock which was continuously on the way up and was outperforming. So I feel one should chase outperformance wherever in a dull market a stock is doing well. That stock should be on your radar. So JK Tire is the first stock. Second, because of the valuation comfort and the numbers which have come good, I feel Seat also is looking good. So one should also not lose sight of Seat because Seat also in the last say 1 year from the lows of 900, the stock has done well to do move to 2600, and now it's consolidating between this zone. But however, the previous swing high, which is placed around 2000 levels of November 2022, has not yet been taken out. So I feel the a strong support positionally is between 1980 and 2050 levels, and till the time the stock holds these levels, it's say 8-10% away from the current market price, the support zone. But till these levels are held, I feel the targets firmly on the upside could be a fresh new high about 2600, 2700.
And Sudeep, let's talk about MMTC as well. Now, this stock has been on a roll and it's up around, I think, or almost 200% in the last 6 months. 87.25 is the level yesterday also, and last week as well. Today, if you see, it's up 5% as we speak. What's actually, this excitement all about, and what are the levels now to watch out for? And do you think this stock is overheated at this point in time?
Absolutely. See, if we say Tanya, the stock is not only overrated, but I feel one should not chase these names right now because the way these names have moved now from 30 odd rupees a couple of months back, the stock is at 90 levels. So it's 3x right now in such a short span of time. So the long term perspective, the long term prospects may be good. The stock may be headed up to 130, 140 levels, but I feel you should utilize the dips to go long and not at the current market price. So wait for a dip, don't chase the rally. And once the stock is not that in limelight, see, important is that when the stock is in limelight, it's overheated. Everyone tends to chase this stock, and once there is a profit booking of 8-10%, and in the last several other instances, say whether SJVN, IRCON, RVNL, after such moves we've seen government coming out with OFSs also. So this is a peculiar kind of a scenario. I feel one should avoid and wait for a dip to enter this stock.
Fair point. And we've seen a very sharp uptick coming in Nifty, now up 100 points. Remember, when we had discussed it a little while back, the fight was on the second resistance at about 19,824. That's been cleaned out by the bulls, now at 19,832. And the strong volume that's coming in is from ITC. A fairly okayish kind of a block deal of 26,600 shares at 452.20, and a very nice move coming into stocks such as Tata Consumer. We've just discussed it a while ago, and Sudeep's view was 950 is where it is headed at. So a nice traction coming in. Now let us see. We have 19,845 as far as futures are concerned, and 19,833 as far as cash is concerned. Insofar as cash is there, the highest level is 19,850 intraday. Whether it will be taken out or not, only time will tell. But it's Kotak Bank, Bajaj Auto, Eicher Motors, and Asian Paints that are clicking away merrily. Coming to you, Sudeep, one very quick view on IndusInd Bank, and then we'll shift focus to the corporate segment.
Sudeep, could you please unmute yourself?
So sorry, so sorry. So see, the overall the chart setup is strong. The prior trend is firmly on the way up. We have seen consolidation in the last couple of months between 1390 and 1450 60 on the upside. The results are going to be announced, so I feel that could be a very crucial trigger. The overall base for the stock would be between 1400 1420. So till the time this zone is held, I feel the uptrend would be in place, and above 1455 1460 levels the stock is headed up to 1520 on the upside.
Okay, absolutely. That was the verdict coming in on IndusInd Bank. And apart from this, any PSU counter that you would like to recommend for the near term or let's say medium term, Sudeep? Because we have seen, stellar rally coming in, when we talk about these mid caps and small caps PSUs. So, any favorite picks from this basket?
Absolutely, yes, Tanya. So if we see the mid-cap space, within the railway space, if you see Railtel, Ircon, all these stocks which had moved too fast in the last previous months, they took a pause, they consolidated, and once again we are seeing a good move in them. So I feel Railtel is one stock which is showing some good momentum on the upside. So from the current levels, Railtel can be bought with 225 as a stop loss and 255 as a target on the upside.
Okay, so that was the pick coming in from the PSU space, and we will be talking to the management of Som Distilleries in a while, Sudeep. So why not, let's discuss this talk before the management talks about the business updates and everything. What are your thoughts on this particular counter, and what are the levels to watch out for?
Uh, Stone distilleries, right?
Yes.
See, if we see this stock, the stock had a very good run in the last 6 months from February till date. The stock has moved from 120 to 380. So steadily, I feel post that up move, the stock is consolidating and witnessing a time-bound correction. So I feel it might not be a one-sided rally from here on. We might see some consolidation, some profit booking, and the zone of 300, 310 would act as a strong support, which is the base of the last consolidation in the last 4 or 5 months that we have witnessed. So I feel the stock could first correct up to 310, 312 zone, and post that it could witness one more round of an upside. So wait for a dip to 310, 315 to accumulate. That would be my view on the stock.
Okay, absolutely. That was the verdict on some distilleries. So the power grid stock that is also in action today. If you could look at the charts and tell us where is this stock headed going forward? 207.35 is the level where we are at when it comes to power grid. And I would request my PCR team to pull up that stock. It's up around 2% as we speak.
See, power grid is looking good on charts on a say, and the stock is, if we see the overall texture of the stock is a slow mover. But in the last few months, with the kind of moves that the PSU stocks have seen, a good base was formed between 160 170. The stock broke out of that and now is headed firmly high, firmly on the upside. The daily, weekly, monthly charts are showing positive traction, and I feel from the current levels the stock is headed up to 215 220 on the upside, and the support zone is 200 levels.
Okay, absolutely. So thank you so much, Sudeep, for
Ah,
sharing these wonderful insights with us and being with us here on Business Today Television. And now let's shift our focus to the corporate side, and we have with us, J.K. Arora, who is the chairman of some distilleries and breweries. Thank you so much, Mr. Arora. Very good morning. Good to have you on our show today. And, firstly, let us talk to you about the second quarter numbers, and why don't you take us through the highlights of the quarter gone by?
You see, the normally the second quarter is generally not that good in the beverage sector because because Shraddh is there, Shravan is there, so rains are there. So normally this part of this thing quarter is generally in the beverage sector. But fortunately, we have done very well against the first quarter, which is the normally very good because of the season April, May, June. This quarter we had the growth of about 51%, and here we had the growth of 67.7%, which is more than our expectation and the best in the business. And if you compare all our peers also, this growth is exceptional. So is our PBT is also is up by 88%, and PAT is also grown by 80%. So overall, the performance of the second quarter is much better than what we have anticipated.
Right. Mr. Arora, welcome to Business Today Television. And it's such a pleasure to host you on Market Today. Good morning. And a fantastic performance, as you say. Across the board, liquor companies are doing phenomenally well. In fact, fairly recently, a particular whiskey from your competitor was ranked one of the best. And I'm sure these are great times for liquor makers such as yours. Your stock has been a fantastic outperformer on the charts. If you see the performance that we've seen fairly recently, it's moved from 60 rupees to somewhere like 360, and the 5-year CAGR has been 30% each year. Mr. Arora, share with us the journey ahead. How much of fresh capacity is coming in? Where are new distilleries being put up, and how are you moving up the value chain?
You see, in this financial year, we have had the expansion in all our three plants. In our Karnataka plant, we did the expansion by 100%. Capacity is expanded by 100%. So is the same as with the Odisha plant, and done the major expansion in the Madhya Pradesh plant also. And I am happy to share with you that all this capacity expanded has been fully utilized in the Karnataka, Odisha, and Madhya Pradesh plant. So, which has resulted this kind of growth, against the normal growth of industry 7-8%. We are doing more than 50-60%. So this is this thing, timely decisions on the capacity, the tapping the right markets with the right product mix. We are the only company which has got a portfolio of brands. We are not dependent on one brand, like one brand is doing well and then you depend on the variants of the same. No, we have got a large portfolio of the brands to cater to the topmost premium brands at par with the Heineken and Budweiser. And on the other hand, we have got a brands for the economy class also. So all these society segments we are catering. So it's doing phenomenally well, and we are again ready for the next expansion. This thing, Karnataka, we have again ordered the capacity expansion to Germany, and Odisha plant also we have tied up with Carlsberg, which will utilize the capacity completely with their tie-up and a recognition of our quality of the products and the basic qualification of the international level. Madhya Pradesh is doing phenomenally well. So this thing, and we are expanding again in the Karnataka this year, and we are also targeting at an acquisition in some of the targeted markets. There are few markets which are having quite a high potential, like Maharashtra, UP, Rajasthan, Telangana, Tamil Nadu, Andhra. These are the markets which are very high potential markets, and these are on our radar to have some acquisition to go further.
Right. Mr. Arora, You've been one of those outperformers when it comes to EBIT margins as well as net margins. They are fairly higher compared with your peers. How would you say, given this fresh value addition that you are planning in terms of better and costlier brands, where would EBIT margins and net profit margins move over the next 4 quarters?
Yeah, I am expecting the better margins for two reasons. One is the exceptional increase in the raw material and packing material prices, which happened last year because of Ukraine war, and the major glass supplier went into the NCLT. So these two were the reasons which has troubled the beer industry too much. But this year it is a balanced, and with the economics of scale now, I am hoping to improve our margins in the coming financial year as well. Because the at the end of the day, it is the with the capacity utilization and the scale. These two things improves your margin overall, despite the fact that you are not having any relaxation on the raw material and packing material prices. But if you are planning well, if you are playing your cards well, then you can improve your margins by just scaling up the business. This is our mool mantra of increasing the our EBITDA and keeping us a little ahead of our competitors.
Absolutely, Mr. Arora, got that. But Mr. Arora, you had to cancel your QIP plans, if I'm not wrong. And so I would like to talk to, I would like to talk, I would like to actually, to talk to us about the QIP plans. I mean, is there any valuation concern or any other concern that you are facing at this point in time?
You see, we have had the plans well in advance for our further expansions. As I said, these are the 6, 7 markets which are quite big markets, and these markets are having very high potential. So there we have the plans to have the acquisition or having a manufacturing agreement with the existing manufacturers to manufacture our brands in the locally. Because you see, this liquor subject is under the domain of the state governments. So having putting up tax is the domain of the state governments. So when you dispatch the goods from one state to another, they put some export tax. And in the state where you import the material, that state also puts some import tax. So these exports and import tax put together dilutes the EBITDA. So the best way of running the business is that you make the products available, made, manufacturing local in the state. So this is our target. These 5, 6 states we should either get into the manufacturing arrangements or having your own unit or a leased unit or whatever way you should have an arrangement of manufacturing locally. This is the uh, an open secret of the business, which applies to the all the manufacturers. So, having that thought in mind, we are having the advanced planning for this QIP we have made. Company is doing exceptionally well. Having this kind of expansion in this financial year, that all three plants had the expansions, and then still we have brought down the our debt of 100 crores. If you see the figures, our debt is down by 100 crores, and company is full of cash at this moment. Internal accruals are excellent, so we have the best plan in hand. So at this point of time, we are not in a position to accept that conditional investment by anyone. So we were having some few conditions and all that, which we said, okay, better we withdraw it, and we'll do it at the right time. We will still show our performance in the one or maybe sometime more, and then we'll go with a again with a good planning and a good pricing.
Right. Mr. Arora, also one of the open secrets of the liquor industry is that it goes hand in hand with state as well as national elections. We have 4 state elections coming in over the last 3 months, over the next 3 months, as also the big one in May. Could you please estimate for our viewers and potential investors, what would be the rise in top line that not only Som distilleries will see, but the entire liquor industry over the next 9 months to a year?
Obviously, what you are saying is correct, that, when there is a lot of disposable income comes to the society, there is so much of expenditure done by the political parties or the other candidates, all that they throw money left, right, center. So that kind of money flows into the society. So and liquor business gets its due share out of the other consumer item. Also, liquor also gets the benefit of it. So 9 months are coming. 9 months are good for the industry. I would say it's definitely business will improve. As far as foam is concerned, we have given if you recall, we have given a guidance of crossing that about 1,000 crore. So out of our guidance of 1,000 crores, we have already achieved 633 crores in first half of the year. So you can imagine we are way ahead of our estimates and the guidance we have given in the beginning of the financial year. So we will cross the initial guidance and will do hopefully better than what we have projected.
Being with us and sharing these valuable insights, and all the very best for the coming quarters as well.
Thank you so much.
So now it's to wrap up this edition of Market Today, and thank you so much to you also, Shail, for sharing excellent data with us as always. So with that, it's a wrap. Markets continue to be in the green, 19,832 on Nifty, 100-point century there on the markets. But let's see how the action pans out going forward. But you don't have to go anywhere. Just stay tuned for all the latest market updates, and many thanks for watching.
On the sidelines of India Today Conclave Mumbai, I'm delighted to be joined by Mr. Ashish Chauhan, CEO of National Stock Exchange. Thank you so much, first of all, sir, for joining us. My first question would be around Indian